Hey guys, welcome to a new video on Equity Picker, and today we are going to talk about PPF. What is PPF? What PPF stands for? How much returns can you expect in PPF? Are this return tax free? How do you open PPF? How much you have to wait for getting money in PPF? So all these details we are going to study in today's video. So in case you have visited this channel for the first time, so please subscribe to Equity Picker, and you can also join our Telegram and you can WhatsApp on this number to get latest updates. So guys, let's start and let's see what is PPF. So PPF actually stands for Public Provident Funds. Now what is Public Provident Fund? So PPF is like an account where like monthly or yearly you can deposit funds. So it's like it's sort of, you can say, something similar to bank account where you keep funds and do an FD, and they give you some interest on it, right? So they give some interest, some return, maybe 6% something, right? Main thing is like that returns are taxed, so they are not tax-free returns and the rate of interest is lower. So here in PPF what you get is two things. So first thing that you get is actually higher rate of return. So rate of return is high, right? Higher than a FD. And second, you don't get any tax. So there is tax-free return and then there is higher. So these are the two benefits, two big benefits of PPF. A higher tax of return which is tax-free, and this tax is very important because let's say you have 2 lakh rupees, right? You did an FD. Let's say you did an FD for 5 years maybe. Okay, now after 5 years when your FD matures, you will get some money. Assuming that you get, let's say, 3.4 lakh, 3.5, 3 lakh around you'll get. Assuming you get the best rate of interest, you get 3-4 lakh. But whatever income that you have, that 1.4 lakh, that is taxed at like whatever salary bracket you fall in. So let's assume you are in 20%, so you have to pay 30k almost as tax. So here, that is the advantage of PPF. This tax you don't get, returns you get a bit higher percent, and when compounded over long time, this actually causes your wealth to increase multifold. So PPF is actually good for increasing wealth in long term, but you have to know some caveats about PPF. So PPF has a minimum locking period for 15 years. Just that may sound a bit like fearful at the start, but actually this is very well suited to develop a habit of investing in you guys. So when we talk about 15 years, right? So let's consider this case that you are just starting your career. Let's say you're starting your career, right? So in career start, or let's say even you are in a middle age, like let's just call it 28 years, 30 years almost. So even this years, if you have this habit of PPF, right, you deposit these funds monthly or yearly, you develop this habit of investment, you get tax-free returns, and that amount that you get after 15 years is actually good amount, and you can use it for various purpose. So PPF gives tax-free returns. Again, I'm stressing on it. Tax-free returns you don't get anywhere. You have to give tax on your returns, and when you get tax-free returns, and that keeps on compounding. So let's say this year you got 1.5 lakh, next year you get 2 lakh. So after that you got 2.5, then you get 3, then you get 3.6, then you get 4 point something like. So it keeps on compounding. Every year it keeps on growing, and since you don't pay tax, that money is also compounded. So again, rate is decided by government. This is another factor. So rate of PPF is decided by government. Usually it's 7.6 currently it is, and usually it's decided every 2 quarters. So let's say every 6 months they come into a review sort of thing, and then they decide the rate of PPF. Now PPF gives benefits under section 80C up to 1.5 lakh. So this is very important. So now you know that you can save taxes up to 1.5 lakh under section 80C, and inside 80C you can also have like ELSS. There is another option, equity linked savings scheme. Then there is like then there is like health, some sort of health insurance premium it will account for. Then there are if you have taken home loan, you can claim all those things. So inside 80C you can directly claim up to 1.5 lakh of benefits directly you can claim by PPF. So PPF also gives you this benefits, right? Now some more things about PPF. So minimum and maximum amount. So 500 is the minimum amount per year, and 1.5 lakh is the maximum amount you can deposit in PPF per year. So again, it's a tax free and it's like a high rate of return. So it's not that you can deposit unlimited amounts. So you have to deposit minimum 500 and you can deposit maximum of 1.5 lakhs. Now if you don't make annual deposit in any year, it may lead to inactivation of your account. So please make sure if you have any PPF account, you have to have your annual deposits. Now in case in event of death of PPF account holders, so in any unforeseen circumstances, the balance amount whatever is there in your PPF account, it will be paid even before the completion of 15 years. And whom it will be paid? It will be paid to the nominee. So whenever you open a PPF account, you have to mandatorily give a nominee. So this nominee will be entitled to your whole amount in case of anything happens to you. And PPF, again, as I told, gives you section 80C benefits up to 1.5 lakh rupees. Now where can you open PPF? Next step, after knowing what PPF details are, okay, lock-in is 15 years, you can withdraw PPF before 15 years also, let's say after 7 years, but again those rules are bit tough. We will talk about them later. Okay, now where to open PPF account? So you can open PPF account at post office. So Indian Post Office, you can visit any branch, you can visit SBI branch or any nationalized bank branch, you can open there, or you can even visit private sector banks branches and open PPF. So PPF is basically you can open everywhere. It's available to everyone and you can visit branch and open. So PPF account opening is very easy. And how do you open SBI PPF online? So a lot of people have SBI accounts. So to open SBI PPF online, so before starting this, I must tell you one more fact. So even if you open online, right, so it's not like it's paperless process and you just click a button and your PPF will be opened. You have to finally visit branch and submit that application. So when you say online, it just means pre-filling forms and printing out application. So you don't have to fill application in branch. Automatically a printed copy of application will be there, and this application you can directly submit to the branch. So you can just open this PPF account online, go to request and inquiries, new PPF account, and then you apply for PPF and then print your online application, then visit branch and submit all the details. And what all documents you need? So if already you have a SBI bank account, then you probably don't need some documents. But even let's say you don't have any account, so maximum possible documents is account opening form, which you get from the branch, then 2 passport size photo, then address and ID proof, PAN card, Aadhaar card, driver license, and then you have to choose a nominee. So these all things are required for account opening, and you have to carry those original identity proofs also for verification at the time of account opening. Now let's take a look at withdrawal rules, because withdrawal rules are a bit complicated, and ideally 15 years is the lock-in period and you should not be able to withdraw before that. But in case of very emergency situations, let's say you have some health issues or you have some education serious loan, in that cases government allows partial withdrawal. So when you say partial withdrawal, up to 50% maximum can be withdrawn, and that can be done only after 7 years. So 7 years is minimum. Before that there is no chance of withdrawal from PPF. So withdrawals from PPF account are permitted only after completion of 7 years from the day of creation of the PPF account. The withdrawal can be made at the start of financial year, and the amount of money that can be withdrawn is lower of 2 things. And what are those 2 things? So 50% of the closing balance at the end of 4th year prior to the year when the money is being withdrawn, or 50% of the closing balance of previous year, whichever is the lower. So based on this lower of whatever value of amount this comes, you can withdraw that amount, 50% of closing balance or 50% of closing balance of the previous year, whichever is the lower, right? So you can withdraw those that amount from your PPF account. So ideally you should not withdraw PPF account. Now some tips, is PPF good? So it's definitely again good for people who are starting their career, definitely good starting their career. So let's say you have to make some investments, you go to equity, then you go to mutual funds maybe, right? You go to mutual funds, then you also deposits in FD. So along with this you can have a PPF account also. So you get a lot of benefits, right? So first 80C, so you can have like 1.5 lakh rupees tax free. So in your salary 1.5 rupees will be deducted from tax and you will not pay any tax. Let's say you are paying in 20% bracket, so directly you are saving here 30 30,000. So you are saving this 30,000, and if you are investing into PPF, you get good returns also, and apart from that returns, you get tax-free returns. So it's very good for people who are especially starting their career or in younger age, and it's needed for their long-term wealth creation. One of the plans, along with equity, mutual fund, fixed deposits, you can also have some of your money parked in PPF. So these are the tips for PPF. So basically, if you are doing a lump sum amount, so try to do that on the first day of each financial year. The reason is because you get interest on that amount. So if you deposit on the first day of that financial year, you actually get interest for the whole year. Similarly, if you are doing SIP, so as I told, you can even deposit lump sum or you can do an SIP. So if you want to do SIP, deposit the PPF contribution between the 1st and 5th of the month to earn interest for the whole month. So this again you can take care. Okay guys, so I think you had good information on opening PPF, types of PPF, all details about PPF. If you want to know any other questions, answers, just comment in the section below and I'll try to answer that questions. And also don't forget to subscribe this channel. See you in the next video. Till then, goodbye.